Welcome to Trade Pro. In this video, I'm testing a 5-minute scalping strategy, but this time it's going to be moving the stop loss to break even once the price has gone in the trade's favor by 1 times the risk, and then still targeting a 1 to 3 risk to reward ratio. So if you check my last video, I tested this exact same strategy, but with a strict 1 to 3 risk to reward ratio. So I'll be testing the same strategy again, a super simple 5-minute scalping strategy using just the 200 period EMA, but this time moving the stop loss to break even at 1 times the risk. So I'll explain exactly what that means by going over the strategy and showing exactly what I'm going to be testing. So I'll test it 125 times because I accidentally tested it 125 times instead of 100. So some extra tests there for you. But anyway, I'll be testing the strategy and seeing how it performs while moving the stop loss to break even. But if you watch my last video, go check that out. I tested this same strategy, but using a strict 1 to 3 risk to reward ratio. So let's talk about the strategy. Just want to give a quick shout out to my affiliate links down in the description to support the channel if interested. Also, I have a Patreon page where I teach my personal trading strategy as well as have 19 trading scripts and 3 indicators available. So check those out if you're interested. But now let's talk about the strategy itself and what I'll be testing 125 trades in a row to see how it performs over a series of trades. So which indicators will I be using? Well, all you need is a 200 period exponential moving average, and I'll be using an ATR based stop loss indicator just for quick testing, but I'd probably recommend in real time to use an actual ATR and calculate what the ATR at that given time for the entry is. That way you can calculate risk accordingly in the moment. Otherwise, you won't know exactly what position size to take and how much to risk on the trade if you're using this indicator, where you have to wait till the candle closes before this gives you a value. But I'll be just using this ATR stop loss indicator just for the testing purposes to try things out and quickly be able to back test. Now let's talk about the strategy. All you need is a 200 period exponential moving average. This one is just standard 200 period EMA, and I've just changed the style of it from the default. Then there's the ATR stop loss indicator that I'll be using, and has default inputs at 1.5 for the multiplier, and then ATR length of 12. And then for the style, I just changed a little bit, which doesn't make any difference. The ATR stop loss indicator that I'm using is here. It's called the ATR stop loss indicator by Edgar_Tran_TR_, and that is it. So essentially this strategy, if you hadn't seen the last video, is just based on bounces off of the 200 EMA depending on which direction price comes at the 200 EMA from. So if price pulls back coming down and it touches the 200 EMA coming from above it, that is going to be a buy entry. As soon as it touches the 200 EMA, that is your buy price, and then the stop loss will be placed at the stop loss indicator upon candle close, and then targeting a 3 times risk profit target, so 1 to 3 risk to reward ratio. But the only thing that's different about this test is once price goes 1 times the risk, so if we put this down to a 1 to 1 risk to reward ratio, so at this point on this candle, the stop loss would be moved to break even, so it's risk free essentially, and then still targeting that 1 to 3 risk to reward ratio as initially entered. So that one there would have worked out, but these two will be stopped out at break even trades. So if we take a look at this one here, price pulls back into the 200 EMA and touches it, so that is a buy signal. So the entry is made, we have the stop loss placed at the stop loss indicator, and then once it hits 1 times the risk, that's when the stop loss is moved to break even here. As you can see, price never goes 3 times the risk, which would be somewhere up here for the profit target. Instead, it reverses and then stops it out at break even. Now this one here, we can see that this time it comes under the 200 EMA, pulls back into the 200 EMA, and this will be a short entry signal. So there will be a short entered here, stop loss goes up to the stop loss indicator, and then at 1 times the risk, which I have it set up at now, the stop loss will be moved to break even. But what happens is it never goes 3 times the risk. It reverses, and then it would take out it at stop the stop at break even once this price does come back up here to where the original entry was. So you'd be stopped out of break even on that one. So hopefully it makes sense. Essentially, super simple strategy, just bounces off of the 200 EMA on the 5-minute time frame, using a 1-to-3 risk to reward ratio, and moving the stop to break even once price is gone in the trade's favor by 1 times the risk. All right, so that is it. Let's get into the 125 backtest and then talk about all the results at the end. All right, results are in, and this did do quite a bit better than the original test, only using a strict 1-to-3 risk to reward ratio. So moving the stop to break even did improve the results drastically. So initially, we had this tested on euro against the US dollar 5-minute time frame using a strict 1-to-3 risk to reward ratio. The difference with this test being the stop loss now moving to break even at 1-to-1 risk to reward ratio. And the time for the 125 backtested trades was 2 months, which is pretty much in line with the original test where it took 1.5 months for 100 backtested trades. Out of these 125 backtested trades, there were 30 winning trades and 50 losing trades. So significantly higher win rate compared to the original test. 45 trades were break-even trades. The most winners in a row was 2, the most losses in a row was 5, and the most break-even trades in a row was 3. And then the gain on the account, 40% if risking 1% of account equity per trade and not compounding. So if you risk 2% of the account equity per trade, this gain on the account figure would have been 80%. So just to kind of talk about that, and 1% versus 2%, you're going to see a difference on that gain on the account figure. But I always keep, when I'm testing any of these strategies, I always have that consistent, just assuming a 1% of account equity being risked per trade. So this one performed quite a bit better, and having just that slight change in trade management drastically improved the results. So let's put it on the strategy ranking spreadsheet and compare it to other tests to see how it stacks up. Okay, here it is on the strategy ranking spreadsheet, and jumping hugely up the list from the original test where it fell at spot number 50 out of the 89 strategies tested on the channel so far. Now it's sitting at spot number 22 just by changing this simple trade management practice with the stop loss being moved to break even at 1 times the risk. So with that 60% win rate / break even rate, drastically improving from that 32% win rate where it was using just a strict 1-to-3% risk to reward ratio, and 28% gain on the account in 1.5 months versus 40% gain on the account in 2 months. Of course, I did test 125 times instead of 100, so I could have extrapolated that and brought it down to 100 and had a more accurate gain on the account, probably in the high 30s. But I just wanted to keep it with the 125 because it's, it doesn't really matter that much as far as putting it on the strategy ranking spreadsheet. It's fine with me to have it be 125 tests. It's in the title for the video itself, 125 trade results. So who cares? But anyway, this one drastically outperforming the original test at you just using the strict 1-to-3 risk to reward ratio by moving it to break even at 1-to-1 risk, then getting that increased gain on the account figure, better win rate, and also having all those break-even trades, preventing a lot of losses. So this one just changing a simple trade management practice drastically improve the results. So I think it'll be interesting to continue testing the same strategy with different methods, like taking partial profits in combination with moving the stop loss to break even, something like that, or maybe changing the risk to reward ratio altogether. But it'll be interesting to see how it can be improved in the future. But anyway, that's going to conclude things for this video. Don't forget to subscribe if you haven't, and like the video, comment down below for the YouTube algorithm. Appreciate you guys as always, and have a great day.